Hello, everyone, and welcome to episode 54 of The DIG. I'm very pleased to have Andrew Swart, Global Sector Leader, Mining and Metals at Deloitte, returning to our show to discuss the recent publication from Deloitte, its annual Tracking the Trends. But before we speak to Andrew, let's get caught up on some of the biggest stories in mining today. It's time for our 6 and 60. Consultancy firm FourKites stated Russia's war on Ukraine could triple ocean and air freights. One example, according to Deloitte's list, is there are over 200 ships waiting to leave the Black Sea. Glencore is reviewing its business in Russia as it condemns the actions taken by the Russian government against the people of the Ukraine. However, China and Russia will continue to conduct normal trade in the spirit of what they call mutual respect and equality. Interim CEO of Nutrien, Ken Sykes, stated global potash supply may experience prolonged disruptions amid the Russian-Ukraine conflict. And on a different note, according to Alchem, electric vehicle manufacturing and OEMs are more active in securing raw materials in anticipation of a lithium supply deficit. And that is your 6 and 60. Every year, Deloitte's global mining team publishes the top 10 trends they believe mining companies should focus on to be not only profitable, but to be sustainable, or as they state, to leave a positive social impact as their legacy. As a mining supplier, being aware of and aligning with these trends will be crucial to maintaining clients and engaging with new prospects. The next decade will witness some of the most exciting and transformative years in the mining industry's history. Key factors that are driving the need to change are the pandemic, digitalization, and embedding ESG commitments into business decision-making throughout the organization. There's a lot to digest in this report, so we are going to zero in on some of the key trends we believe are the most important for the mining supplier. So let's dig in now with Andrew Swart. Hi, Andrew. Welcome back to DIG. It's a real pleasure to get you back here with the latest version of Tracking the Trends.
Great. Thank you, Ryan. Good to be back here.
So before we get in and do a little deeper dive into some of the trends, can you kind of give us a broad overview of the report and maybe a little comparison of what's changed from 2021?
Sure, no problem. First of all, maybe if I get to the second part of your question first, I think having done Tracking the Trends now for sort of many years, it's not like you see radical shifts from year to year, right? I mean, we'll tend to highlight particular areas, dial certain areas up, dial certain areas down, sort of depending on what we're seeing in the industry and how the mood and some of the challenges and opportunities are shifting. I think as we look at this year's trends, it's not surprising that ESG sort of dominates the agenda. It's been featured in our trends now for the last 3 years. I think, last year what we did is we actually decoupled the E, the S, and the G, whereas I think this year we've put more of a focus on how do you operationalize ESG. And so we've got one trend particularly on aligning capital allocation to ESG. We've got another one which also looks at how you organize against ESG from an operating model perspective. We've also got some trends which are sort of more future looking. One of my favorite trends of this year, which is really around how the traditional mining value chain is being reshaped in some interesting ways. We have picked up on this broader sort of super cycle, but also a rise of resource nationalism in different parts of the world. And so what mining companies really need to do to operate in this new sort of super cycle. It's got a little bit of a COVID flavor to it, given that I think a lot of a lot of governments have come out of the COVID crisis quite indebted. And so, we see mining industry as seen as a bit of a target for that. We also have some trends that deal specifically with talent. So we have one which is really around how the world of work is going to shift and evolve. In particular, what do companies need to do to position for what is increasingly a competitive labor market? Along those lines, we also have a trend from an innovation perspective. We've featured innovation a number of years now, and we do believe it's a recurring theme within the industry, and one that the industry really needs to focus on. I think particularly relevant this year is decarbonization lens on that, because I think applying innovation to some of these decarbonization challenges will be quite central. We've also picked up on broader indigenous relations kind of around the world, and we've sort of cast what we believe is a new paradigm for indigenous relations with respect to mining companies in the years ahead, and so we're sort of quite excited about what we're seeing there, and I think again some of the opportunities and challenges. Integrated operations. We spoke about integrated operations last year in our trends, and what we saw as the potential to unlock that value. We've spoken about it again this year, and looked in particular what companies need to be doing to break down some of those silos within the organizations to unlock that value. Cyber. So we've got a couple of trends that are related to risk. One of those is around cyber, where we believe that this is a particular vulnerability for mining companies. And as mining companies drive towards more digital futures, how does that actually create or give rise to increasingly vulnerability at the IT/OT interface? And then we also have another trend which also picks up on the risk side, which is around climate and climate-related risks. And so while there's a lot of talk around the decarbonization journeys mining companies need to do, so how does mining company do its part to let's say lower the overall sort of temperature of the planet? On the other hand, mining companies also need to be insulating themselves or thinking about the risks associated with climate change with respect to their operations and their supply chains and kind of logistics. So that's a very quick nutshell of where we've landed this year.
Well, I think it's a very excellent summary, actually, Andrew. I know I took the time to go through this report. I hope everybody takes the time. It's a lot. I expect myself to go through it several times because there's so much in there that you can learn from. So it's homework for me in the future as well. Let's try and dig into some of these trends, and let's talk a little bit about the number one, which, as you had earlier said, ESG is such an important part of how companies are going to be behaving, and then you kind of put in trend one, aligning the capital to ESG, which is really putting the money towards making sure it's aligned with their strategies, isn't it?
Correct. And I think this is where the rubber really hits the road, right? So what we've seen in the past is a lot of mining companies saying all the right things and putting out the right reports and articulating the commitments to sort of ESG. But where it really becomes real is when you're actually allocating capital to advance that particular agenda. And so, can you step back from the pool of capital you're putting out there and saying, okay, what's actually going to different portions of ESG? What we've done in the trend, we have focused on, let's say, different potential portfolios. So how aggressive do you actually want to be from an ESG perspective? I mean, I was on a call with one of the global miners probably last week or so, and we were talking about capital allocation. And in this particular discussion, this individual was saying, well, if we just looked at the allocation of capital for the next sort of couple of years, it probably wouldn't pass out traditional hurdle rates, right? But what we've done is we've looked out 5 to 10 years and saying, if we don't spend this capital, it'll actually exclude us from a whole portion of the market. And so I think it's those sort of tensions which you're going to see a lot of the industry wrestling with, because you are, particularly on the decarbonization side, you're going to have some low-hanging fruit, and it's going to clear the hurdles. But I think increasingly you are probably going to be in a position where you might have to spend certain capital amounts to take on certain projects which may not meet some of your traditional hurdle rates, and that's going to be a very interesting conversation.
Right, and I think it's so important. I saw, when the BlackRocks of the world and the investor community starting to make this a very discerning line in their investment strategy or expectations and where they're putting their dollars as a tipping point as well. And so for companies now to have a narrative that's focused on that ESG that aligns with those expectations from those companies, you have to now demonstrate that. And so this just makes complete sense to me, and I can see how this is where a lot of, from my lens, a supplier lens, is you can have an opportunity to actually help them in executing those ESG strategies. So
100%. I mean, Ryan, if you look at Mine Expo, this year as an example, I mean, what was interesting when you looked at across a bunch of the technologies and the suppliers out there, in comparison to, let's say, Mine Expo, I guess 4 or 5 years ago, when the last one was, the amount of emphasis that was now being placed on elements of ESG was radically different to what it was then, right? So I think a lot of suppliers have recognized that, but I certainly think that there's more work to be done in tying some of these technologies to how you can actually help and advance the ESG agenda of mining companies.
Right, and I think it's really a maturity curve. I think as the industry starts to, and players within it start to mature down this ESG journey, if you will, we're going to start seeing it a little more into the contract language. You'll start seeing actually the capital markets putting it in their valuation models. So you'll be changing the whole financial models and hurdle rates as we speak. And that, I tell a lot of the membership and a lot of the viewers will be, I'll call them the scope 3 of the scope 1, scope 2, scope 3. If people don't understand that language, this is, how they manage a lot of the carbon footprint.
Yep.
And so I think they're going to be asking, and they're being asked, some are being asked right now to demonstrate what their footprint is. Even though it might be small, it's still going to be relevant.
Correct. Yeah, 100%.
Yeah. So let's go to trend number 2 here, reshaping the traditional value chains. You mentioned that this is one of your favorites. Can you kind of dig in there a little bit about that?
Yeah. So look, I mean, as a strategist, I just find this particular trend really interesting, and we had a lot of fun actually sort of writing it and thinking through this one. But it is. I think some people may say it's probably one of the more radical trends that are out there, but I think there are a lot of interesting signs out in the marketplace as to how the traditional value chain of mining is shifting, right? So you mentioned in your last comments here around scope 1 and scope 3 emissions, and so one company's scope 1 emissions is another company's scope 3 emissions, and I think what's important about that is that the value chain actually becomes the important unit of analysis here. So who your customers are, who your suppliers are, really matters, and will matter a lot more as companies begin to declare and begin to report on their scope 3 emissions. And so what's interesting here is, you look over the last year, there are a number of mining companies who've actually signed memorandums of understanding with downstream steel players, as an example. And the purpose of those agreements is to actually look at ways of decarbonizing the steel industry. Again, why are these mining companies interested or worried about this? Is because they have to report on those scope 3 emissions kind of going forward. And so they want to be part of that solution. And similarly, who you are using as your suppliers as a mining company is also going to matter sort of going forward. And so these factors are all going to be impacted. So when you step back from the value chain, you've got these interesting alliances actually occurring. But what you're also going to have is players far further down the value chain. These could be automotive manufacturers. They could be manufacturers of certain commodities which are utilizing metals as kind of inputs. Well, they're increasingly going to be looking right down the value chain and saying, okay, how do I source some of these responsible minerals, because that's what I'm going to be ultimately measured by my investors. And so you see some of these downstream players actually backward integrating or going into offtake agreements with mining companies. Like, this is real. It's happening today, right? But I think it's going to happen more and more. Similarly, what you see is non-traditional players in the mining value chain entering the value chain. So look at chemical players. Years ago, lithium was the domain of mining companies. Now it's chemical players that are actually coming into the traditional mining company space to extract that lithium. You also have companies exploring business models, like new circular business models, and going into the circular economy. And so I think those are really interesting trends. And so, you think about a traditional mining value chain, who's upstream, downstream matters. People are now backward integrating. You've got new players coming in. You've got changes in the portfolio. You've got circular business models. It's a very interesting space going forward. Very interesting space.
Yeah, and I'll be very curious to see, like, it's very relevant, I think, to the suppliers moving down the path here, and to be aware of this, that this is going to be a decision-making factor for a lot of their potential clients or clients. What I find really interesting is, historically on, say, the Bay Street and the Wall Streets of the world, there's been this decision to really, navigate portfolios specific on gold and specific on copper. I think you're going to see, by virtue of this trend that you're speaking of, you're going to, as companies start to get into other, almost like conglomerates or up and down the value chain, you're going to see interesting dynamics, probably how you evaluate them. Like, they're almost moving towards like a GE or a Japanese vertically integrated company as well. So it's just
absolutely a lot of portfolio changes happening.
Yeah, definitely. Let's go down a few trends here, and let's talk about the closing the IT and OT vulnerability gap.
Yeah, so look, in the last couple of years, mining companies have made this big push into digital. And whether or not they are automating portions of their operations or they're driving big data, but increasingly driving transparency through the organization. And so that interface between the IT layer and the OT layer is going to become really important, or is becoming really important today. But I think one of the areas that keeps us up at night is around the vulnerability of that particular space from a cybersecurity perspective. And so this is an area which we honestly believe mining companies need to be paying a lot more attention to going forward in comparison to what we've seen.
Right. And I'm thinking about from a supplier standpoint too, that has to consider this as that cybersecurity protocols and enhancements start to happen. It might make it a little more difficult, or they have to be aware of trying to get their information, say they are sensor-based or some sort of information. I've been saying this for years now. If your product isn't talking and reporting out how it feels or what it's doing, it should soon. And so how do you acquire that information from an operation or a client base to aggregate it into your larger, so you can do more innovation R&D? This will have an impact, I think, on it, or it potentially could be.
Correct, Ryan. I mean, I think, look, there's going to be a lot more pressure on suppliers on a number of different angles. I think the cyber side, but then as we've spoken about broader, emissions, ESG, etc. So I think a lot of additional accountability and expectations on the part of suppliers that's sort of coming through on a lot of these trends.
Right, exactly. And let's get to that last one. A lot of people hear about climate change, and we're reading about it, but as a supplier, you might not think about it much, how it could impact your business. But really, when I was reading the report and I listened to some of your your audio on this, and it's like, you get your product on a container, if you can find a container, then you get on the ship. That ship might get delayed because of some extreme event and it doesn't get to port. Now you've hung up and you haven't delivered your product in the time that it expects it to be done. So yeah, talk a little more about this one.
Yeah, so look, I think a lot of our mining clients right around the world, are sitting in, have got operations sitting in different locations that are exposed to different weather events. And so whether or not you're talking floods, which will disrupt supply chains, or you're looking at droughts, we've seen examples of mining companies which have had to shut down for several months because of, lack of water, as an example. Or you look at other disruptive sort of weather events and their impacts on ports and logistics and those sort of areas. And so I think while a lot of mining companies are increasingly focused in putting out targets, net zero, type targets over the next couple of years, what we are encouraging mining companies also to do is to say, well, you also have to be realistic that the world is warming, and therefore you are going to see more volatility in different weather events over time. And so you have to consider that risk, right? You have to consider about, what happens if you're not able to get supplies in and out of the mine site. What are you going to do with rising sea levels or things like that, and the impact that that could have on your ports and infrastructure? Or, if you are sitting in a remote portion and annual rains and floods come down and washes away your roads, like, how are you going to deal with that in terms of getting your personnel in and out of the actual mine site? So these are all factors that mining companies, and therefore by extension suppliers, are going to have to think about. Like, what are your plan Bs? So how are you going to think through some of these different scenarios in terms of your ongoing operations?
Right. And maybe if I can segue from this climate change perspective, because it is a disruptive thing to the supply chain, or potentially can be. We're also seeing, because of the pandemic and some of the international political tensions, the desire for what we will call resilient supply chains. And in my mind, I see that as more localized. That's how I translate a lot of resilient to being. And so what are your thoughts on that aspect of?
Yeah, so look, like last year, you talk about the trends for 2021. One of those trends that we specifically called out last year was around resilient supply chains. And we looked at both resilient and agile supply chains, and it was a response in many ways to COVID, as as sort of COVID was shutting down certain markets kind of around the world. And so critical spares and supplies became really important. And our focus there was to challenge mining companies to look at those areas and say, how you can't just look at the supply base from a cost perspective, right? You also have to look at this from a risk perspective. And in some cases, it might mean that you might have to look at more localized supply chains. But on the other hand, what you also just have to do is look at the resiliency of those supply chains kind of going forward. And so I think, again, the climate change aspect really speaks to this as well. And it's a different lens on a similar issue.
Right, exactly. Well, we could be here for a lot longer time, and maybe I can get you back sometime soon to talk about the other themes and stuff. There's so much in this report. But I really want to thank you for taking the time right now, Andrew, to take a deeper dive on a few of these trends. And it's always a pleasure to have you on. So thank you very much for being here, Andrew.
Great. Thank you, Ryan.
That's it for this week's episode. I'd like to thank Andrew Swart from Deloitte for taking the time to be on The Dig. And remember, follow us on Twitter at Mining Suppliers and LinkedIn. And if you haven't already, hit that subscribe button so you can get notifications of all our upcoming episodes of The Dig. Thanks for joining us. Until next time, I'm Ryan McEachran. Take care and stay safe.